So the backstory on that is one of my friends is he's a competitive bodybuilder, and we got talking about epic classical music sometime, and he's like, well, this is one of the songs that I listen to at the gym. And I had never heard that before. That was the first time I heard it, and that was pretty pumped up, right? That was maybe too much for the stream start, right? Nah, Big River, man. It's just for us to get pumped up for the gym, mate. This is how we get there. Alright, so in terms of FX, yes, it was pretty aggressive. We're worried about how the market's going to react on day 2 of the Trump sell-off. It was pretty sharp selling, but all of Asia today we've seen a recovery in the US dollar. Now this is, to me, I think, well, dollar yen anyway, not so much the US dollar against the other majors, but dollar yen is a key factor in whether risk is on or risk is off. So I don't usually like to try and sell into a third day. It would be surprising to me if this market had its third day when there's no concrete negativity. It's just, unease with Trump rather than anything else. And his talks with the farmer, actually led to a farmer rally, so it's not that negative. And we've got the Fed coming up, right? So the Fed is, should be some sort of stabilizing force here. So timing wise, I think today would probably be a bit of a snapback. If today's stock markets struggle and we can't, sort of get back to above 20,000, or if we fail at 20,000, the market pulls back, it's looking a little bit off it, then we can sort of change our view on how dollar yen's going to fare. But this is pretty nice building, slowly building action here, and it's constructive for me anyway. As looking for reasons to buy dollar yen, I'm getting a few. We were going to wait until, because it broke 112.50 this morning, I was going to be waiting until we got down to that 111.50 level, but that's a nice little bounce back here, and so you could actually consider to be buying dips here, probably around 113. The Fed could come out and be a bit more dovish than expected, a bit wait and see approach, and if the market wants to read into it, and this is sort of how you want to play. I mean, the Fed's probably going to be pretty neutral in the grand scheme of things. They'll talk up why they raised rates. They'll talk up the chance of raising rates this year, but they'll probably also talk up how they're going to be data dependent, and they're going to be slow and steady. How the market reacts to that, what it picks up on, what it wants to do, is sort of, you'll see its underlying bias. And I suspect that there is a bit of an underlying bias to be selling the US dollar at the moment. So if we end up being pretty strong on the US dollar today, and there's nothing hard hitting from the Fed, then I think that's a little bit of a hint, a little bit of a green light that the US dollar correction is nearing its end. If the US dollar selling, sort of intensifies with just a bit of nothing in the Fed announcement, then we might prepare ourselves for a little bit of a bigger pullback. For a long time, we've been watching 108 on the euro as sort of like the cap in sort of any reversal. Okay, so really what it does here as well is going to be pretty interesting. The euro got a big boost last night from Trump advisor saying that euro is severely undervalued. I mean, that's not the biggest reason to buy for 300 pips, right? That's good for a day rally, but is it going to really change the whole mood of the market? I doubt it. So yeah, today will be pretty critical, I think, for the whole. I'm going to try and read into how the market's set up here by how we end. Okay, how the market reacts to this Fed announcement. So tomorrow morning will be pretty interesting. We're like a pretty important juncture, right? For stocks, we're at a pretty important juncture. For the US dollar, we're at a pretty important juncture. Any more weakness from here for the US dollar would start to be a bit more systemic and look like the whole long-term trend is under pressure. I'll start to lose faith in this US dollar uptrend this year if we have sustained US dollar weakness now. and my faith in buying dollar yen on dips would be, eroded. Now pound, I think is probably going to be heading up towards its previous highs from last week today. So 126.75. I think that's going to be tested at some point. That's good for the euro pound shorts that we got going on. That's the trade that I have at the moment. The thing about this trade I like is that, pretty easy to set your stop on it, so you know if you're wrong. And you back out and see if this the market's not really rolling over. But I don't mind selling into that. I don't mind selling into that at all. I suspect that we have actually put a little bit of a top in here, so I'm happy to sell into this little rally, targeting 83, 84. So it's 84 down here. Yeah, that's a little bit meandering, that little opening rant about watching the Fed and how the market wants to react to it. It's sort of just taking your cue from when it's much ado about nothing announcement, even though it's a big announcement, and the market wants to play US dollar weakness or US dollar strength. You can see the underlying bias a bit clearer. Now, obviously, the Fed might actually contain things which are bullish and which are hawkish. In that case, then you can't really read into the underlying bias, because it's not, there's actually some explicit reason to be bullish or bearish. But if there's nothing much in there, but there's pretty big moves one way or the other, then you can read into it a little. US dollar, the thing which we haven't looked at for a while is the US 10 years as well. So the US yields, which is so important for the rally, aren't really weak. They're not really weak at all. So I don't know if really we can turn our back on this US dollar yet. Bit of jawboning, bit of Trump weakness, bit of Trump disappointment. I still think I'm still a bull in the US dollar. I'm just starting to get threatened. In terms of the Aussie Kiwi, yeah, there was new low in the cycle, and then a sharp rally, short squeeze. It's prone to bounce to short squeeze in the Aussie Kiwi. Now the burden of proof is still on the bulls, right? You can't get too excited by this. Well, it's dangerous to get too excited by this. This is prompted by weaker than expected New Zealand unemployment data, and there's a bit more follow through than usual, probably because it was stretched, the Aussie Kiwi to the downside. But for us to get back above 105 seems like an almighty method, almighty little rally here. Aussie has to break higher, which is possible. It's been building now to the top side, 76. But then the Kiwi, in its fine form, probably trying to play catch up too. So, yeah, Aussie Kiwi, for us to start the big rally, requires a change in the RBA before the RBNZ. And the RBA next Tuesday, the risks are it's going to be negative, yeah. The risks are we have weak inflation here. So, if anything, RBA's bias might still be towards cutting rates. And since the RBA doesn't have a bias, well, the market has not priced in any bias. The risks are still very much to the downside from the RBA next week. That leads me to be not chasing any sort of Aussie rally, especially for the Aussie US and the Aussie Kiwi. So, don't be buying Aussie above 76 ahead of the RBA, that's for sure. But, if your RBA remains neutral or even comes off surprisingly upbeat, which it has done in the past, sort of shrugs off that weak employment data, the weak inflation data, then perhaps the market will play the other way too. I mean, it's the first RBA meeting we've had since December. They don't come out in January, so devil's advocate maybe. maybe there will be potential here for a bit more of a sustained Aussie Kiwi rally. Just let's not get our hopes up too much here. You definitely can't rely on Kiwi weakness if that's the angle that you're going for. The Kiwi weakness is not reliable at all. So yeah. Now I'm not going to be streaming tomorrow, but I will stream on Friday's NFP, so at 12:30. The unemployment data from New Zealand was the unemployment rate really shot higher. Now we've had that sort of strange variance in Australian data, so it's not like the unemployment change was that big a miss. It wasn't really. It was more the unemployment rate had a big change. Now that can be due to the amount of people looking for work, right, and participation rate. So it's a bit of a, it's not the cleanest one. Also, we had the Chinese PMI data came out. That was flat. Now China's still away, so it's you know, you're not seeing any movement in Chinese stock markets this week, but definitely you're not seeing much movement in yuan either. Let me just check this data from the. It's causing me a bit of trouble. Why are you selling off £4? Hey, pound has sucked me in a little bit here. Bit of a false break on that 126. The data from pound that just came out a couple of minutes ago was really as expectation. It was. The manufacturing PMI from the UK, spot on expectations actually. Alright, so tonight we do have the manufacturing PMI from the US, pretty important, and that will come out pre-FOMC. We also have the ADP preview. Now that's not growing in importance, but definitely getting a bit more views than usual in the last, say, 3 months. It's not a good indicator, but the NFP has actually been pretty stable, right? And so ADP has started to give a little bit of a indication of how it's going. When there's variations, you know, when there's large swings in the US NFP, then perhaps it will break down a little bit more, but the ADP has been pretty good. I sort of forecast to last a little bit. So I don't mind looking at it tomorrow a little closer than I used to. So perhaps today will be a little bit more eventful, right? We've got a few things on the cards. You don't have to wait for the NFP, right? This is Wednesday, a bit of an important juncture. Is the stocks going to fall for a third day, or are they going to snap back? And you know, what's going to happen on some of these key levels in the majors? I mean, Euro 108. Right, that's I know more than a few traders that want to sell up here. You know, and dollar yen, just need to get the green light, and you know how many people will coming back for the dollar yen. So it could be an important day in terms of setting direction. Now I don't have much. Look, I literally got no US dollar exposure. I don't mind playing with the euro pound because in the 2-horse race between the pound and the euro, I suspect pound's got a bit more room, and that's one of the main reasons I'm playing the crosses at the moment. Is just to get away from the US dollar when it's in flux, when it's not clear what's about to happen. And you know, maybe that's you should think about that with your trading, right? A lot of the times we can get into trouble just by getting involved in situations in the market where there is a bit of a coin toss what's going to happen next. And it's more prudent just to stay on the sidelines or play with the crosses. I suspect we go topside tropical fill, but I wouldn't be chasing, mate. It feels like it's building to the topside Aussie, but you know, 76 is getting a little exy. And you got those big risk events that we just talked about, the RBA next Tuesday, and you know, NFP and Fed tonight. Both of those, all three of those, could turn this market. So at really high levels, you're sort of, you have to have faith that the Aussie dollar's gone to 77 or 78, and I just don't have that conviction. You know, apart from it, but straight up trading off the charts, looks strong, doesn't it? Now, one of the traders literally a couple minutes ago just posted, this is in the FXW room, Aussie Kiwi pullback or parity. Straight up our alley, Dave. Straight up our alley. Alright, so they're still selling into this rally, looking beyond the short-term squeeze. Now you probably noticed this with the Aussie as well. Like a couple of years ago, it was extremely, the Aussie and the Kiwi were extremely correlated to S&P moves. So this is basically stock market moves. You see that correlation is breaking down. Did come back a little bit last year, but it's breaking down again. So no longer can you just tell me what the Dow did last night, and I tell you how the Aussies are faring. That's just the way that the correlations change, evolve over time. Alright, so the main view for being bearish is RBNZ. It's going to refrain from further easing. Next move is set to be a rate hike. And they think the RBA has some downside risks and another cut later this year. That will do it. If that happens, then you know you have Aussie Kiwi going lower. I think the Aussie Kiwi is entrenched at near record lows. I mean, we really talked about it all the time about this parity and getting long on the parity. I still think it's a very good trade, and that you know we'll make a lot of money out of it. But it's just, when does the rally happen? I don't think we can just buy parity because it's parity and then say, hey, yeah, it might be prudent to sort of wait for the market to turn rather than just buy a level. Yeah, so it'd still be very interesting if the Aussie Kiwi gets down there again, and obviously we're going to be talking about it a lot if it does. good boy. Pound. Good boy. And hasn't that changed? We should do a little bit of Aussie Kiwi research all the time because they come back and the market's on our way again. Good. Good, good, good. In terms of Trump's issues, you know, so he's just nominated the new Supreme Court Justice. Now that is probably going to be the next fight that we see politically in America. But, you know, it's a fight which traders understand. It's not really out of the comfort zone of traders' minds. It's not starting any crazy trade wars or anything. It's just the Republican Democrat stuff. So there's nothing hard hitting for negativity wise anyway. Yeah, he didn't fire anyone today, so you know that's the start. Just going to find a little bit of research here for the FOMC. So the broad thing is they think it's going to be uncertain risks. Probably waiting for Trump's policies before they, you know, start raising rates too quickly. And there is no press conference, so there is no grilling of Yellen. So they don't do anything when they don't raise rates when it's not a press conference. They don't make big announcements when there's not press conference too. So it'd be hard for us to get a takeaway that they're definitely, you know, thinking. I don't think we're going to come away from this thinking that March is a live meeting. Yeah, guys. I mean, the Aussie is you know very bullish. It had every reason to break lower, in the last couple of weeks and hasn't. Yeah, so it's definitely, you know, got that bullish base going. It's just that we're quite high. The next part of this mountain that it has to climb is not easy. So that's the main reason I'm not chasing here. You know, this next 100 pips, you run into some serious resistance from last year. Doesn't mean we can't go past it though at all. It's new year, new world, but we would require significant repricing of the Fed. Probably some weak NFP, and sustained good news. Well, just no negative news from China. So you can see here that the short-term market, you know, the whole idea of them raising 3 times in the Fed this year, that's a really important distinction between 3 and 2, right? Now, Fed said they're going to raise 3 times with their dots, and the markets thinks only 2 times. So there's a big amount of US dollar rally in that difference if there is a closing. So, you know, it's hard to actually squeeze in 3 rate hikes, right? You'd have to start a little bit earlier than expected and keep on raising, and Trump would have to be doing all this fiscal expansion to sort of justify it, I suppose. But you know, there's still room for a strong US dollar rally if it becomes clear that the 3 is more likely than 2. At the moment, with 2 just priced in, it's you know, that's a significant short-term change anyway. It's like the Aussie dollar, right? The RBA's got no prediction for the next 12 months, so the next sort of bias that we have will be overshot by the market. And this is what makes the US dollar so sort of reactive to Trump. If he starts wars on things which are not to do with tax and not to do with his fiscal spending, you know, and he starts a war with the Republican establishment, it's going to be very hard for him to get the money to do a huge fiscal expansion, right? So when he starts wars on things like abortion, on immigration, he sort of lowers the chance of getting cooperation on some of the more ambitious fiscal things that he wants to do. They still hold the purse strings. And it's not like the US dollar has been gangbusters in the last, you know, months since the Fed raised rates. And the US dollar has actually been losing a fair bit of ground. So they shouldn't be too worried about overshooting with the US dollar. I mean, it'd be a different story if the euro broke in parity. And Trump's already shown he's not shy to talk about US dollar strength, so it's going to be probably a little bit harder to get really big moves, US dollar strength moves this year. But definitely inflation and employment is full employment is basically getting there. So inflation, the expectations are rebounding. The actual inflation hasn't rebounded too much, but the expected inflation is rebounding. So this is really where, if inflation starts to come through, you may see the Fed's hands sort of pushed a little bit, and then we'd have to start pricing in that, depending if it's global inflation or just local US inflation, right? I mean, global inflation, sort of all the ships rise at once, and if you have global inflation, then you get ECB taper talk, and ECB taper talk is probably a bigger deal for the market than Fed raising 2 or 3 times. You know, the difference between the Fed raising 2 and 3 times is important, you know, very important, but ECB tapering earlier than expected is extremely important. That stuff puts that's 1,000 points on the euro, if that becomes the case. Higher. So yeah, no, it is important how the Fed comes across, but you know, and I suppose they are going to be talking up rising inflation expectations and full employment. I don't see the takeaway being, it would be wait and see approach, I think, so I can't see it being too negative for US dollar, but we'll definitely review it on Friday, which will, you know, before we get into NFP. But yeah, other than that, guys, good luck with your trades. Yeah, pound's doing quite nice. Risk seems on today, so this is an important day for the dollar bulls, sorry, and an important day for the Dow. We'll see how we go. So it's a very important data from the US, just ADP and the US manufacturing PMI, but then the Fed is also critical here. So good day for trading. Alright, I'll be back on Friday night. I won't be here tomorrow. If you do want to have a chat with me, just send me a PM. I did sign up for the trader contest, so hopefully we get that going some point next 24 hours. Should be a good little trader contest this year. You can see inside the grid, it's like 30-40 people already. So this is it's going to be a bit of a doozy. Alright guys, good luck with your trades. I'll be back. I'll see you all on NFP day.